You are a tax manager in a firm of chartered tax advisors. Your client, Mary Blair, has contacted you to discuss the latest results of her business ventures. Since 6th of April 15, Mary has traded as a sole trader, running a small shop in the northeast of Scotland, which sells art and design supplies. She draws up accounts for the business to 5th of April each year. Okay, so I'm thinking no overlap profits.
Agreed. Why?
Because her accounting period matches the tax year exactly.
Excellent.
The result for the business are as follows: 10k profit for 16, 24 for 17, 28 for 55 for 18. So I'm thinking section 64 loss relief against the previous year.
Yep.
Also, if she's got other income, she could make a section 64 election to offset it against that. Yep. Section 83 to carry it forward. Section 71 if we find out she has capital gains. She's not ceasing the business. She's not. Is this the first? Oh, this is the first 3 years of her trading.
Excellent.
So she has the section 72 election she can make, and she could. I am using my memory joggers here, by the way. That's why I'm.
I was thinking you've got the sections on point.
But that's why I'd have them in the exam. In my defence.
Exactly. Yeah.
So I'm allowed this. I'd be allowed this page in the exam. So it's not like it's not exam conditions.
Exactly. So you're fine.
She can make a section 72 election because it's the losses incurred in the first 4 years of trading. So she could offset it against the 3 years before on a FIFO basis.
Okay, perfect.
I think that's basically everything there. Would you say?
Yep.
So
that's
Mary was also approached by friends of hers who were looking to set up a partnership as caterers. She could contribute 5k to the partnership in return for a 20% profit share. That's not partnership losses is not my strong point. I suppose it's good we're doing the question, therefore. Mary spends all week running her shop and so can only contribute 8 hours each weekend to helping with the catering business. The partnership currently trading on 1st of May 16 and draws up accounts to 31st of October each year. Mary's share of the results of the business are as follows. Right, so here there are going to be overlap profits because it's an October year end. Having said that, commence trading on the 1st of May 16. I'll come back to that in a second if that's all right.
Okay. Yep.
Well, the first year is going to be May to the following March.
Yep.
So that's going to be 11 months. Then the year after, so that's going to be 16, 17, and then 17, 18. Wait, no, sorry, that was just.
So the first accounts are to 31st October 16. So yeah, you're right. It'd be taken a bit from the first period and then up until 5th of April 2017, which will take a bit of the loss from 31st October 2017. And then you'll have the whole 12 months up until 31st October 2017, which is 1st
the whole
of
of the
December.
30K, but you're going to have to make an adjustment so you don't double count the loss.
Correct.
So how much of that loss are you taking? You're going to be taking November, December, January, February. So you're going to take 5/12 of that.
Yep.
So you're only going to get 7/12 in the second period.
Yep. Agreed.
I don't know what that is off the top of my head. So the first period is going to be 15k plus 5/12. The second period is going to be 7/12 of 30k.
Which is 17,500. So as you probably realized, the more you start looking into this and thinking about this, the more confusing you could say it gets. Because this is the exam that I sat and I was unsuccessful on. And I remember the more I was reading this, the more I was getting confused. But you're on the right track. So yeah, let's keep going.
Sad memories. Sorry to bring it all back to you.
No, it's fine. It's all good.
Okay, all well's them as well anyway, so you passed it now.
Exactly. So I'm happy.
Okay, so Mary's not drawn any money from the pot ship. That's completely irrelevant. There's no taxes based off drawings for partnerships based on profit share.
Correct.
Could you just scroll down? Prior to opening her shop, Mary was employed for many years by so-called PSC, earning a salary of 140k per annum. Right, so here I'm thinking she can use maybe she could use a section 64 election, but I don't think the loss was until the third year actually.
Yes, so the loss was in the third year, but you can go back 4 years, right?
Oh, is that for the
section 72? Sorry, yeah.
So because she's a new business, you can go
Yeah.
back
Open year loss relief.
3 years before the year of the loss on a FIFO basis.
No, you go back 4 years before the year. Yeah, it's the losses of the first 3 tax years can go back 4 tax years on a FIFO basis.
Okay. Yeah. Sorry, that makes sense. Yep.
So she can effectively, the 5th April 2018 loss, you can go back to 2015, 16.
Okay.
Yeah.
20. Great. So she.
No, sorry. 20. So it's the 17, 18 year. So you go back 4. So you can go back to 13, 14.
Excellent. Yep. Yeah. So section 72 election available then.
Yep.
I'm actually dealing with this question better than I thought I would. So far anyway. She had no other income during this period. Following her retirement on 5th of April, Mary received annual income from pensions of 60k.
So she's got further income now. She's got a 140k salary, but then following her retirement, she's also received annual income from pensions of 60,000. So that's every year.
So pretty much every year the section 64 relief is available.
Exactly.
During 1415, Mary disposed of a valuable painting which she owned. She generated a capital gain of 42k. So there, a section 71 election would be available if she wanted to, though probably not as good an idea as offsetting it against her salary or pension.
2014-15, she disposed, so she generated a capital gain of 42,000. 14-15.
So that's not going to be available because it's just lost in the current or previous year.
Yeah, exactly.
And she didn't incur it till the third year, so there's nothing she can do about that. Okay, you're required to show the tax losses available in 1718 and explain how these could be utilized, making recommendations where appropriate.
Okay, so you are required to show the tax losses, as you say, available in 2017-18, so 17-18 tax year, and explain how these could be utilized. So explaining how these could be utilized and making recommendations where appropriate. So what they're trying to say is, how could the loss be utilized? Straightforward. And making recommendations where appropriate. They're trying to say, discuss all the available reliefs and then you sort of give your best recommendation.
Okay.
When you're explaining how they could be utilized, they can be utilized in all the ways you mentioned. Section 83, carry forward, section 64, current previous year, section 71, capital gain, section 72, opening year loss relief. And obviously you don't have to mention it. I don't think you'll get any marks for saying terminal loss. Wait, is terminal loss relief available?
I don't think they were ceasing to trade.
No, they're not ceasing trade yet. So, but because I have seen a question once where they start trading and then within like 2-3 years they cease trading as well, so everything's available basically. In fact, yeah, section 83 won't be available if you cease in trade. And then making recommendations. So as I say, you have to sort of think about and discuss what the best course of action would be. It's a 15-mark question. You're not required to consider national insurance. That's fine. It's a 15-mark question. So with this, there's a lot going on. We have 4 sources of income/losses. We have the sole trade business.
Yeah.
We have the partnership loss as well in the same tax year, 17-18. But then we have the salary from previous years and the pension. The capital gain will be relevant, but we can come to that when we get there. But effectively, what we need to do now is structure your answer in the best way possible, because there is a lot going on. So structure would be the most important thing here, just so that you don't get confused. So what are your thoughts? How would you sort of start your answer?
I'd probably start by just for the sole trader and the partnership.
Yep.
Well, I'd start with the sole trader And I just want to write out what the actual profit or loss was for the for 16, 17, 17, and 17, 18.
Okay.
Or do I just care about?
I think we
No,
only
I
care
only
about,
care about 17, 18. I'd want to know. Well, if I could get it just for 17, 18, that would be fine.
yeah,
So
I think the question is the tax loss is available in 17, 18. So yeah,
let's just, I just want to start with 17, 18. And so I'd probably write something here about the fact that there's no issue with overlap profits or losses. To be fair, it's the third year anyway. So whatever, I'd just say because the accounting period matches the, it doesn't matter by the third year anyway, because that's just going to fall in the tax year. Anyway, I'd say 17, 18, the sole trader loss incurred is 55K.
Yeah, a loss of 55K, and yeah, that would be.
It's current year basis.
Yeah.
And this is the accounting period that falls in the tax year. Therefore, the loss incurred in the sole trader business is 55K.
Excellent. That's a great start.
And then I want to know what the partnership loss was. So I'd make a statement about the fact that in 16, I'd say something along the lines of in 16, 17, opening year rules mean that 5/12 of the 30K loss have been allocated to that period. Because there are no because overlap losses are not allowed, the partnership loss incurred for 17, 18 will be 7/12 of 30K.
Okay, and 7/12 of 30K is 17,500.
Yeah.
So we have a loss of 55K for the sole trade and 17.5K for the partnership. Okay.
Then, sorry, go on.
No. Yeah, keep going. That's perfect.
What would I do next? Just scroll down if you could. Omar, thank you. Probably just like write out what the actual income is that she's got to offset it against.
Yes, because it's saying you are required to show the tax losses available to begin with. So to do that, we'd need to we need to have everything in the same picture. So this 140,000, this 60,000, so we can know exactly what we have. So I think each year we need to sort of, usually with losses, you make a table. So you have the years going across on the top, and on the left-hand side downwards, you have the source of income. Shall we do an Excel?
Yeah, that would be excellent. That would be excellent. So I think the first period is going to be 14, 15, and it's just going to be that 140K salary. And then every other year, there's going to be the 60K pension. Oh, in 14, 15, there's the capital gain of 42K. And then the only other things to add in are the partnership profit for that 1 year and then the 2 years of sole trader income.
Yep, agreed. So, okay, you should see my Excel screen.
Yeah, that's great. Yep.
And her name is Mary. Okay, so as I say, we start with 2014, 15, right?
Yes.
And then 2015, 16, 2016, 17, and the most important year, 2017, 18. Source of profit. So what should we put first?
Salary or employment income, 140K.
And that was just in 2014, 15.
Yeah. Pension income.
Okay, pension income. And that is from 15, 16 onwards, right?
60K, yeah.
And that's every year as per the question.
Yeah.
Okay.
Sole trader income. That is, well, just what it says. 1 second, I'm just going back to it.
Yep. So 5th April 16 was 10K and then 17 was 24K.
Yeah, 1024. No, overlap profits to worry about because the accounting period overlaps the tax year. Exactly. Nothing in 17, 18. Then there's the partnership
Yep.
profit, which is 15K, 5/12 of, what is it, 30K plus 15, minus 15. 2.5 grand.
2.5. So you did the 1st of May to 5th of April 17 for the 2016-17, and you did 15,000 less 5/12 of 30,000,
Yeah,
right?
exactly.
Gives you 2,500.
Well, 5/12 of 30K is 12.5, and there's 15K of profit. So yeah, 2.5. Yeah. Only other thing is the capital gain in 14, 15.
Okay, so this is our income. We can have capital separate. It's best to keep capital separate. Why? Because the Section 71 claim is an extension against income. So initially, you'd offset against income because capital usually is obviously it's a separate source of income to begin with in terms of income capital, and also it's not a regular sort of source. It's just a one-off. So you keep that separate, and we just say gain. Which tax year was that in? How much was it?
For
After annual exemption of 42,000 in 2014-15. We'll just total this up. Okay, so perfect. So now we have everything in front of us basically. And I'm just going to put here, what did we say the loss, what did we say the sole trade loss was again?
55K.
55K.
And the partnership is going to be 17.5.
So effectively, we've got everything in front of us. And now we can provide the best advice or best recommendation. So you are required to show the tax losses available in 17, 18. So we've done that. That's that done.
Yep.
Okay. And now we need to explain how these could be utilized. So this is where the bulk of the marks are coming from, the explanation on how it could be utilized. So how would you begin?
I'd probably go sole trader and then go through the different types of loss, and then I'd go partnership and go through the different types of loss.
Okay.
So if you're like sole trader, section 64, section 83, section 71, 72 rather. So I'd do like 3 paragraphs on sole trader.
Okay. So just let's just go through them then. So what do you want to? Which one do you want to start with? You want to start with section?
Let's start with section 83 because that's the
easiest. It's always the easiest. Correct. Yeah.
And I'm just going to say here that like losses incurred, the 55K loss incurred in 15/18 can be carried forward against future tax years and offset against the first available trading profit from the same trade. This section 83 loss relief is available because to the 17/18 is within 4 years from
no, I think you're getting confused. Section 83.
Yeah, sorry. I've read the wrong bit. Yeah, I'm going to full stop. Forget I ever said that.
Yeah, no, that's good. So the key word you used was the loss of 55,000 can be offset against first available future profits of the same trade. That's very important. First available future profits, but it has to be of the same trade. So you can't say that, oh yeah, next year we'll be getting this annual income from pensions definitely of 60K. So the 55,000 can go against that. No, when you carry forward, current year loss relief going backwards, you can do it against total income, but carrying forward can only be against profits from the same trade. So it can't even be against the partnership. Okay, so that's that. Those are the keywords that they'd be looking for. And
the thing about the 4 years was the claim must be made 4 years from the end of the tax year of loss.
Yep.
That was the point I was trying to make there.
Yeah, and you could mention that because that is some sort of advice. So make the claim within 4 years from the end of the tax year of the loss. And what are the advantages / disadvantages of Section 83? Because we will be making recommendations. So it's good to
the disadvantages that you've got to wait for the relief. It could potentially be years until you get that relief.
Agreed. Uncertainty. You're not sure if you're definitely going to make profits in the future.
Yeah. Probably another disadvantage would be that actually no, I was going to say you've got that salary but that's going to be at a higher rate, but then all of her sole trader income is going to be at a higher rate anyway because she's got that 60k pension contribution. So
yes,
it's not like it would be at a different rate.
Yeah.
Would it waste a personal allowance though?
If you carry forward?
To be honest, she's got the pension, so it's like the pension's going to use it up no matter what.
Yes, exactly.
So if it was just sole trader income she had, that might be a risk. But
Yep, agreed. If it was only the sole trade, then you would definitely say that potential wastage of personal allowance. But you mentioned the key point, which is always the key point for carry forward, and you just sort of memorize it and put it down as soon as it comes up, which is that as soon as you decide to carry forward, you are wasting the opportunity to get a cash refund from previous tax years, which is beneficial for cash flow purposes. And also there's the uncertainty going forward, whether you actually will make profits. And the other thing you can mention is a bit of a random point, but you don't know what rate of tax will be in the future. So it might be 40% now. In the future, it might be, I don't know, they might just bring it down to 35%. So you're losing that 5% as well.
Or she might have some disaster with a pension, and then there is the risk that
exactly.
Personal allowance.
Yep. So you can even go into further detail and say the risk of personal allowance wastage is there as well. Yep, that's excellent. That's comprehensive. Okay. Advantages of carry forward?
I'm not sure there are any really.
No, agreed. Carry forward, losses are always relieved as early as possible, and that's in real life practice as well. They are not, unless the only carry forward advantage would be if you have budgeted high level of profits in the next year, anticipated profits, and if you were to go back, you'd definitely be wasting your personal allowance. That would be the scenario where you'd rather just carry forward.
Yep. Yeah. And that doesn't really apply here, I don't think.
It doesn't apply here at all, exactly.
Yeah, happy with that one. Excellent. Happy that I started with that one as a choice. It's built my confidence up.
Yep.
To get started.
I'm expecting the same level of answers now.
This is a mistake. Should have ended with that one. So the next thing I'd probably talk about is Section 72 losses, because it's a early years loss relief, basically.
Yep.
And because this is a loss incurred within the first 4 years of trading.
Okay.
Which means that you can offset it against one of the 3 years before the year of the loss on a FIFO basis.
Yes, agreed.
And you can offset it against net income. So in this case, it could be offset against any of those 3 years. So it would have to be offset against the 140k salary.
Yep.
Because it's on a FIFO basis. So if you were using it here, it would be offset against the 14-15 year.
Yep.
And you'd be getting relief at 40% immediately. So I'm not sure what else I could say about it. Oh, it's subject to a restriction, which if I just flip over the page here, it tells me, and 25% of adjusted net income.
Okay, so how would that apply here? That will apply here. Because if we're saying we're taking this loss, 2017-18 loss back 3 tax years, I think, I'm not too sure exactly what I mentioned, but I think you did say it's the previous 3 tax years, and I agree.
Yeah,
with you. It is the previous 3 tax years. I'm not sure if I was saying 4 for some reason, but you go back 3 years. So 1, 2, 3. So this 55,000 loss, you'd want to take back to 14-15.
So
we have
sorry, go on.
Yeah, so we have a 55,000 loss. The Section 24A restriction says that the loss against, so losses against the same trade is fine. There's no restriction. The loss of the Section 24A loss restriction only applies when you're offsetting losses against total profits. And that is restricted to the higher of 50,000 and 25% of total income or adjusted income. Okay.
Yeah.
So in this year, 2014-15, we'd be allowed to take back 50,000 or 25% of 140,000, but it seems like the higher would be the 50,000. So we can offset the 50,000 against the 140,000, leaving you taxable profits in 14-15 of 90,000, therefore giving you a cash refund of 50,000 times 40%.
So I'd say it's immediate and it's 40%, but you're wasting 5K.
Yes, in that way, but not necessarily. Now the 5K, you can also use a separate loss relief.
So I can just do that against 15-16, can I?
Exactly, yeah.
Oh, so in which case this is going to be as good as anything then?
Exactly, because you can use it against 15-16, or you can even just do normal current year loss relief now, or you can even carry forward.
So mention the restriction, and the claim must be made in the 1 year from the 31st of January following the year of the loss.
Yep.
It's immediate. Yeah, I don't have much to add on that one.
Okay, just the Section 72 loss relief doesn't extend to capital gains. Only Section 64 can potentially extend to capital gains. So right, 72 opening year loss relief doesn't extend. And also, this is a bit of a wild point, you would say, but 140,000, she would have lost her personal allowance.
Oh,
right?
yeah, I was going to mention that. Yeah.
Yep, go for it. I'll let you mention that.
Well, she actually, she'll get relief at 60% partially.
Effective rate of 60%. Why? Because
on the 25K of the 50K.
Agreed. You're looking at, I think you'd have to look back at the personal allowance in that tax year in practice.
Oh yeah,
but yeah, it'd be the 25K, and in practice, yes, you don't just simply carry back the 50,000.
Yeah, of course, I didn't think of that.
You do a full recalculation of that tax year, basically.
So actually, I think that's actually going to be the best option.
Mm-hmm. Agreed with you.
If I was typing this out, I'd then move that to the last paragraph, so I could conclude by saying this is the best option.
Okay.
Because some of the relief is at 60%, because you're reclaiming your personal allowance essentially for 14-15.
Agreed. Excellent.
Whereas everything else is just going to be at 40%.
40%, correct, yes. And this is the earliest as well. So, because then if we look at 18-19 potentially, let's just say there was to be a loss, then that can be used against 15-16.
Yep.
Rather than using 17-18 against 16-17, and then, in fact, no, 18-19 loss, you can still go back to 15-16, but this is still the best because 60% effective tax rate.
Yeah, I suppose after this tax year, 14-15, you'll never have the opportunity to offset losses against that again.
Mm-hmm.
So there's no risk that you're wasting future losses.
Agreed.
Whereas in every other year, there are, Section 72 could still apply, will still apply next year.
Yes.
So you risk wasting profit on which future losses could be offset if you're using losses against any other tax year other than 14-15. I'm not sure I'd make that. That's quite a long point, but maybe I'd make that point in the exam. I don't know.
Yeah, why not?
If I was desperate, I'd make that point. If I had a lot of time and I was desperate.
Yes, that's fine. Okay, so we've already given our recommendation, but we still need to explain the other ways that the loss can be offset. So what are we going for next?
Section 64.
Yep.
And it can be used against the loss-making year and or the previous year.
Mm-hmm.
So either the 60K in 1718 or the 86,500 in 1617. However, that is also subject to a restriction.
Mm-hmm.
Do I know what that restriction is? No, I don't.
Yes, you do.
Is it the greater of 50K and adjusted net income again?
25% of adjusted net income. Yep, agreed.
So again, it's going to be restricted to 50K.
Mm-hmm.
Because it's the adjusted net income thing's never going to come in unless they earn more than unless adjusted net income is greater than 200K.
100% correct.
Which isn't the case here. So it's going to subject to that same restriction because it's 55K.
Mm-hmm.
What else can I say about that? If you want to make a Section 71 claim against capital gains, you have to have made a Section 64 claim first.
Agreed. Yes.
So if you want to make a claim against that capital gain, you have to have made a Section 64 claim first.
No. So this capital gain, we can't use this capital gain because, as we mentioned, Section 72, which is opening year loss relief, does not extend to capital gains, and Section 64 only covers these 2 years.
Yeah.
So that gain, I think it's just there to trick you to see if you put the Section 72 opening year loss relief against the gain as well.
Yeah.
Or maybe if you do 140 plus 42, giving 182 times 25%, maybe, I'm not too sure, but you definitely cannot use it. You definitely cannot use it because Section
it's only current or previous year, is it?
Exactly. Only after Section 64 has been utilized, then Section 71 can be brought into play.
If you're offsetting the 50K against 1718,
yep.
You can choose which year, by the way. I should also mention that. It can be one or the other or both.
Agreed. That's
in any order you want.
Yes.
Now, I would favor going for 1617 fully because you're going to waste part of your personal allowance if you use it against 1718. You're going to waste 2.5K of your personal allowance.
Yep.
And so it's going to be restricted to 50K in 1617, and then the remaining 5 to go against 1718, so that no personal allowance is wasted.
Okay. Yep.
Would you agree with that?
I agree with that. What rate of tax would the savings be?
Partially at 40%, partially at 20%.
Yes. And again, as you say, you'd rather go back to 1617 because more will be at 40% and you'd retain the personal allowance. When you're carrying back against any section, so Section 64, this is the final reason why Section 64 carry back against 1617 is better, is because you can take back the 55,000 against the 24,000 with no problems at all. No restriction.
Yep.
Okay. And then that leaves you with 31,000. And then the full 31,000 can be relieved. So there's no 5,000 to be offset.
Right. I didn't know that.
So yeah, if you carry back under even under Section 72, you can always profit from the same trade. So under Section 72, let's just say there was a loss of, I'm just going to put here, loss of.
Oh, yeah, I've just seen the section here. The restriction only applies to loss relief against non-trading income.
Correct.
It does not apply where a loss is set against income from the same trade. Yeah, I wouldn't have known that.
That's fine. So let's just say it's going to be a bit of a mess in our head, but let's just say now in 1819, let's just say in 1819, we have a 70,000 loss and there's no pension income.
Yep.
What would you do?
Go back to 1617, unrestricted.
Okay, but bear in mind that this 24,000 is
Are we
gone
saying
now.
that that's already been, sorry, are we saying that's already
sorry, yeah, that's what I'm saying, it's a bit of a mess.
Oh,
but
sorry, okay, yeah, so let's
say 24,000 is gone.
Well, I'd still go back to 1617.
Okay, that's gone, so we got
okay.
31,000, and then so we got 31,000 less 2,500 is 28,500. So
I'd still go back to 1617 because the personal allowance was slightly lower. Okay, that changes things slightly. Right.
Because now you're only saving tax at 20%.
Yeah.
But here you can still save at 40%.
Right. I can't go back that far though, can I?
You can be.
Is this early years loss relief we're talking about?
Oh yes. No, sorry. Opening year loss relief is the first. Yeah, it's the first 4 tax years.
Oh, so I can still. So this is.
Yeah, exactly. That's what I'm trying to test. So this is the last. This is the last year. You just made it. The loss just came in, which is the first 4 years, first 4 tax years of trading. So yeah, it can go back to 15, 16.
Okay. So what would I do? Are you asking?
Yeah.
I'd make a Section 72 claim and go back to 15, 16.
Okay, and then again,
it would be restricted to, well, 10k would come off.
Yep.
Then the remaining 60k would be subject to it would be restricted to 50k.
Mm-hmm.
So it'd be 10k left there.
Yep.
Then carried forward would be the 10k. It would have to go against 16, 17 because it has to be used on a FIFO basis.
Oh yeah, exactly. And then you just carry forward there.
So that would, yeah.
So that would be the best thing, rather than simply just going back against the 60,000, because you can only go back 50,000. But now we've fully utilized the 70,000 loss. So that's excellent. Okay, let me just undo everything. Yep. Okay, so no, that's right. So you said the 24,000 gets knocked off. So that leaves you with 31,000. And then the balance you'd still be saving some tax at 40% and some tax at 20%. And the full 55,000 would be utilized. However, your recommendation is still a Section 72 claim. Why? Because you save tax at the highest rates possible, which is some of it at 60% as well. And the earlier, the better. As we have seen, if we didn't do this 140,000 loss relief, then some of this would have been used up. So if we did have that 70k loss, they'd literally be nothing. They'd be probably something.
I'm just going to write in my book here, earlier the better.
Definitely.
As a little phrase.
You'd say 95% of the time, the earlier the better. Why? Because you can get cash refund, uncertainty going forward, and but whilst you're saying the earlier the better, you're also looking at the wasting of personal allowances and trying to save at the highest rates.
And as well, the more recent years, you might have more opportunities to offset losses against them. Mm-hmm. Whereas the earlier the year, the lower the chance that you're going to have another opportunity to utilize a loss against that income.
Agreed.
As time goes on.
Mm-hmm.
Yeah. I mean, I suppose that's an example there. If you go back to 16, 17, you might have a loss in 18. Or if you offset in 17, 18 rather, as an example, you might have a huge loss in 18, 19, but there'll be nothing left to offset it against.
Correct.
If you use a Section 64 claim.
Mm-hmm.
Whereas if you're going back to 14, 15, that's ancient history anyway. So you're not going to care about that when the next year rolls around.
Exactly.
Great. I think that's everything I'd say on the sole trader side of things. And my recommendation would be to use the Section 72 election.
Yep, that's perfect. I think that's comprehensive. That's fine. So let's move on to the capital element, the partnership element, sorry. So the first paragraph, it says, the first two paragraphs. Mary was also approached by friends of hers. Caterer, she agreed to contribute 5,000. So a capital contribution is 5,000 and 20% profit share. She spends all week running her shop, which is a sole trade, so can only contribute 8 hours each weekend. So looks like a non-active partner. Have you come across a non-active partner?
Now you mentioned the phrase, I know it, but I wouldn't have known to bring that up. But yeah,
Okay.
I know it now you've mentioned it.
Yep. So basically, any partner that doesn't spend more than 10 hours per week or less than 10 hours per week would be classified as a non-active partner. So they've the thing with these questions is there's a reason they've put all the information there. Now, the only thing they're tricking you with is this thing here, which is the capital gain. They've put a whole sentence there, but it's not relevant at all. But other than that, anything they put in the question is relevant. So contributing 8 hours per week, that's what you think, non-active partner. And as we've mentioned it now, it'll be fresh in your head for 2 weeks' time.
Yes.
Yep. So yeah, so that's what you'd get a point for saying that, or at least half a point just for saying that she is a non-active partner. Now, what are the effects of being a non-active partner?
Pass.
So there's any losses for non-active partners are also restricted.
I found the section here.
Yep, go for it.
Non-active partner is a partner who does not spend 10 hours per week on average working in the partnership. For a non-active partner, sideways loss relief or capital gains relief is restricted in the first 4 years of in the first 4 tax years of the trade to the lower of 25k or their unrelieved contribution to the partnership.
Mm-hmm.
From the 5th tax year of being in the partnership, sideways loss relief / capital gains relief claims are subject to the annual limit of 25k. There is no restriction to the amount of trading loss that can be carried forward under ITA 2007, Section 83.
Okay, so Section 83 is still fine, but anything other than that would be the lower of 25k and unrelieved contribution. But effectively, the loss is still at 17,500 as per our calculation. What are your thoughts? How would we relieve the 17,500?
Well, what losses are available here? I mean, are the losses is it just going to be the same? Well, I'd probably start by mentioning, let me just go back to where I was. Just carry forward relief?
Not exactly, because remember, we can still go back to 15, 16, 16, 17, because it's still...
I'm not saying it's the only thing that's available. I'd just say I'd start by saying this is an option.
Yep. Okay. Yep. Go for it.
Just to get, in the hope that it's in the mark scheme, just to get some easy marks.
Oh yes. Yep.
And just say it's a loss that can be set against the first available future trading profit from the same trade.
Mm-hmm.
And a claim must be made 4 years from the end of the tax year of the loss. So I'm not sure I'd have much to add on that. I'd just make that point.
Yep, no, that's perfect. Yep.
Also got a, is it a new business, does it say?
Yes, they've just started to trade, looking to set up, and they commenced on 1st of May. So again, 72.
So at Section 72, loss reliefs available because this is in the first 4 years of the trade, and this can be set against the 3 years before the year the loss is incurred on a FIFO basis, against net income, subject to, I mean, is this going to be subject to the non-active partner restriction? It will do if it's set against a different trade. So
correct. Yep.
So this is going to be the lower of 25k and unrelieved contribution.
Yep.
Which I don't know what the unrelieved contribution is.
Okay. Yeah, no, that's fine.
Whatever that is, it's restricted to that.
Let me just check. Okay. Therefore, what she can make lower of 25,000 unrelieved contributions. So they've said capital account 5,000 and undrawn profits of 7,500. So they've said 12,500. It's the lower of 25K and 12,500. So let's just say 12,500.
Great. So I'm just going to go with the earlier the better.
Yep.
So can I go back to 1415 as well?
You could have, however, this sole trade loss already used the maximum. You know, the 50,000.
Oh, the 50K. Yeah, I didn't think of that. Yeah.
That would be the only issue there. So
in which case I'll have to do 15, 16.
Yep.
And I'd use the what did you say the amount available was? Sorry,
12,500.
So I've set 12.5. So the options there, I've set 12.5K against 15, 16.
Yep.
Which will all be at higher rate.
Mm-hmm.
So loss relief is available at 40%, but there'll be 5K left, which I'll have to put against 16, 17.
Yep. You can put against this share here, 2,500.
So that'll be relieved at 40%. And then presumably the rest of the 2.5K will just be carried forward.
Yeah, exactly.
Okay.
That's perfect. That's comprehensive. That's everything.
And I think if losses came up now, I'd be fairly happy, to be honest.
Exactly.
So it's basically gone from being like my worst area to an area I'd be happy with.
Yeah, that's how it is. That's how a lot of these topics are. But losses is like that, yes. I used to hate losses as well. I used to hate basis periods. I used to hate everything when I first started, but as you keep going, you just start. As you start understanding, then it just all falls into place. So that was comprehensive. Yeah, and I think that was a very good question to revise losses, because it's got literally everything. And this table here, very important to draw out in your exam, because you have everything in front of you.
I think it's just trying to getting the structure right is like 60% of the battle. Like that's almost as important as knowing the stuff. Knowing how to write it down. I'm just going to be right back 2 minutes.